Westpac predicts the Reserve Bank will take a pause next month and keep the official cash rate at 3.25%, which would put an end to a long run of reductions. It comes as the government is accused of relying on those rate cuts to grow the economy. But the Finance Minister insists those cuts wouldn't have happened without the government's tighter spending. Here's political correspondent Zane Small.
MPs gathered this morning to hear from the Office of the Auditor-General about the fallout from the Children's Ministry, Oranga Tamariki, reviewing its contracts with hundreds of community service providers.
Our view is that the issues in the contracting round significantly harmed trust and confidence in Oranga Tamariki.
The Children's Ministry spent most of 2024 reviewing its contracts with community service providers after it was directed to find 6.5% savings.
Finding that $120 million over the 4 years, what impact did that have?
That's when they made their decisions about which services they would not engage further.
The government came to office with a promise to reduce spending after price inflation soared in the wake of the pandemic. And the Finance Minister insists that tightening the government's belt has helped the Reserve Bank to deliver consecutive cuts to the official cash rate, the benchmark for lending rates.
When governments spend too much, it drives up inflation, and reserve banks are then bound to raise interest rates to deal with it. That is what happened on Labour's watch.
I think the government can't claim credit for falling interest rates. Actually, the Reserve Bank did that, and the government's spending cuts have made negligible, if any, impact on the Reserve Bank's decision-making in that regard.
The government has been accused by the Taxpayers Union of relying on rate cuts to do the heavy lifting of economic growth, and the tax lobby group isn't alone in that view.
They certainly are desperate for the rate cuts to grow the economy. Yeah, they are. That's their main, they're putting virtually all their eggs in that basket.
What do you say to accusations that the government has relied on interest rate cuts to make it look like the economy is growing?
Well, what I'd say is that interest rate reductions are very meaningful for New Zealand families and for anyone who has a mortgage.
But future rate cuts are looking less certain, with inflation ticking up again against a backdrop of global uncertainty. Westpac's economic commentary out today predicts the Reserve Bank will take a pause next month, and it's noted that increases in economic uncertainty are expected to be a drag on investment appetites.
They want to take the opportunity to slow down the pace of rate cuts and maybe have a look at the situation again in August.
For now, though, the economy is supported by strong overseas demand for dairy and meat. Export prices are now 17% higher than a year ago. But even that is uncertain thanks to Donald Trump's tariff turmoil.
I think the Reserve Bank's greatest concern is that the uncertainty about the trade outlook might just delay the recovery a little bit.
The economic outlook not so clear, and neither is the outlook for Oranga Tamariki's contractors.